I feel like this video might be one of the most important videos that I've done on this channel, and it could be one of the most important videos that you've watched. Hey everyone, I hope you're doing well. My name is NIHM and welcome to the channel. In this video, I'm going to talk about a topic that no one really mentions. They just go through it very quickly in their videos and they mention it, but I'm going to go into it deeply in this video, which hopefully I can convince you with. And I know it's very important to talk about technical analysis of Bitcoin, fundamental analysis, meaning the news and everything that's going on in the market to understand where Bitcoin is going and if we're going to make money and if we're going to the moon or not. But what's more important is don't invest more than you're willing to lose. Now, I know before you click away, I know you've heard this multiple times, but you've never seen anyone, or I've never seen anyone explain why you shouldn't invest more than you're willing to lose. So I'm going to talk about this in this video, and I'm also going to give you a strategy that you can follow in order to avoid doing that. With Bitcoin climbing back to $55,000 and many altcoins pumping such as Shiba Inu, I know FOMO is starting to kick in and euphoria is kicking in, and right now you feel like you're going to miss out and you need to dump all your money in crypto. Don't. Even though we established that Bitcoin is here to stay and crypto space is here to stay with the NFT hype that's going on, with all the projects that are being developed, with all the big institutions that are investing in crypto, such as JP Morgan talking about Bitcoin potentially being better than gold, and Soros fund, or George Soros and his family investing in Bitcoin. They said that they did buy Bitcoin, in fact. So I know these cause a lot of hype and a lot of excitement when it comes to buying crypto, but here's why you should only invest money you're willing to lose. Number one is that investing money that you're not willing to lose, or investing money that you can't afford to lose, is a recipe for disaster, and you will 100% lose when you do that. And I'll explain why. Let's say your rent is $1,000 per month. And right now you decide that you're going to invest your $1,000 that is saved, that you were planning on using for rent, in Bitcoin, because you're going to take it out next month as $1,500. And let's say you buy right now with all the hype and all the good news and all these news outlets talking about Bitcoin going to the moon. You buy at 55,000, and let's say it goes down to 50,000. So that's a 10% loss. It's not too bad, but a 10% loss for you is $100, meaning that now you have 900 out of the 1,000, and right now you're short on your rent for the coming month. So what do you do then? You say, oops, I'm just going to cash out because I need to pay my rent this month. You lost $100. Now you have to figure out a way to find or to make another $100 so you can cover your rent. So this is number one. It is guaranteed loss when you invest money you're not willing to lose. Now, on the other side of the spectrum, let's say you were willing to lose that $1,000 and you buy Bitcoin at 55,000. It goes down to 500. You're going to be like, okay, I'll just wait for it to recover and go back to 60,000. Now, even though I'm a fan of buying discounts and buying the dips, for example, George Soros said he owns Bitcoin, he owns some Bitcoin, and I know for a fact that he did not buy, or his family or his manager or whoever is handling his funds did not buy Bitcoin at 55K or at 60K. I know that they waited for the dip when it went down to 30K, and we saw this huge support and people buying at 30K. I truly know that he started averaging in on that price, and he started throwing in lumps and lumps of money at this price. And he definitely invested money he is willing to lose because he's got plenty of that. The second reason why you should not invest more money than you're willing to lose is not so much of a financial reason, but it's more of a health concern, and that is your mental health. When you invest money you're not willing to lose in crypto or in any other business venture, it takes a big toll on your mental health. And because you're constantly thinking about it, you're stressed about it, you're worried about it, you're anxious about it, and that definitely is not a good thing to have in your life. Even though I'm not saying run away, and I'm not saying that you shouldn't go for things that scare you. However, when it comes to this in particular, if you're feeling FOMO, if you're feeling anxiety, if you're feeling that you're scared when the market drops, then you're probably investing too much, and you're probably investing money you're not willing to lose. And for that reason, I would say dial it back a bit, maybe take off 20% of your portfolio, maybe dollar cost average a bit less than you actually are. By doing that, I bet that you'll have a way more pleasant experience investing, and it won't be very stressful after all. The third reason why you should not invest more money than you're willing to lose is because opportunities are going to come and go. Let me iterate on that. So right now you feel like Shiba Inu went to the moon and you missed out on it, for example. And you feel like you have to buy right now and you have to spend all your money because you're going to go to the moon with it. But let me tell you one thing. Even though crypto right now is at its early stages and we have so much growth and so much potential to grow, eventually from now and later on in your life, it's not going to be the last opportunity. There's going to come way more opportunities. It probably might not be as massive as buying crypto right now or buying crypto 10 years ago. However, it doesn't mean that there won't be opportunity. It just means that you might get a little less return, but still, some return is better than no return at all. And for that reason, I think you should decrease that FOMO and again focus on investing money you're willing to lose, because in the long run this pays off and you are gonna make it doing that. If you are getting value out of this video, I would really appreciate it if you can hit that like button. This just tells me that you're enjoying it and encourages me to make more of them. Now I'm gonna mention something that I've heard many times, and many times people ask me for advice about crypto, and I tell them one advice above all is don't invest money you're not willing to lose. And then what they say is, well, I don't have any money I'm not willing to lose, or there isn't any money at all that I'm not willing to lose. Let's say technically they do have money they're willing to lose, they're just not willing to lose it because they're not okay with losing money. But let me tell you this, if you're saving your money because you don't want to lose it, technically due to inflation, you are losing money while your money is sitting in the bank. But personally, the way I think of it is I would rather risk losing money for potential high rewards versus not risking the money for guaranteed losses. And this is exactly what happens when you save your money and not invest because you don't have money you're willing to lose. And as always, there's nothing guaranteed, because in any business venture or any investment, there is money that you should be willing to lose to enter it. Otherwise, you would not take that step and you would not invest. So now you're thinking, what strategy can I do in order to avoid spending more money that I'm willing to lose? And I'll give you one that's very simple to follow, and it worked perfectly for me. So take a look at your paycheck. Let's say you make X amount of money, and ask yourself, how much money am I willing to lose? And ask yourself in another way, saying, how much money do I spend when I go out on a meal and I don't even think about it? Could be $10 for some people, could be $50 for others, could be $100 for others. It's all relative, everyone's different. Let's say you are someone who doesn't mind spending $10 by eating out every day or every week. Then you can say, I can spare $10 every week. And then this means that you can spare about $40 every month, meaning that you can just invest $40 every month or so. This way, you're eliminating, number one, the emotions behind, should I invest this $100 that I have? And the second way, you'd be dollar cost averaging, meaning that you're not buying the highs or the lows. You're just buying the highs, the lows, and anything in between without even thinking about it, without analyzing it, without giving it much thought or much mental capacity. So by doing that, you remove the guessing work completely, and by doing that, you're more disciplined. You only spend money that you're actually willing to lose, because at this point, you know that there's a chance that you might lose that money, and you don't mind losing it because you were going to go ahead and spend it on Starbucks anyway, but instead you decided to invest it in your future for potential higher returns. And remember guys, the number could be different for anyone. That's it. Thanks for watching. I really hope you enjoyed this video. If you find it valuable, please leave a like, subscribe if you're new here, and I'll see you in the next one. Peace out. Bye.